Surf's Up. Learn to ride the F&O waves only on Bloomberg Quint with Agam Vakil.
Hello and welcome to Surf's Up with me, Agam Vakil, on Bloomberg Quint. And as usual, we're here to get perspective on the futures and options market in Indian equities. The Nifty has steadily gained to move above 8,500 with rollovers picking up over the past two sessions, indicating more traders are carrying their positions forward. This is a truncated week and we are looking at an expiry. Uncharacteristically, the India VIX has remained subdued so far, with more writing seen in index puts. The question is, as markets move into budget week, can traders expect higher levels, perhaps some consolidation, or is there a possibility of an increase in volatility? Well, joining us today and guiding us through these waves of open interest this week is Manoj Vayalar, AVP of Derivatives at Religare. Thank you for joining us, Manoj. Well, and I'm going to start off with your view on the Nifty, considering the fact that we are moving into the budget week.
Thanks, Agam. Agam, as you rightly said, because we are getting into an event and obviously there is a sentiment which always rolls to an impending event, just like the union budget. Now, the index option, precisely or Nifty future options, they reflect a lot into the sentiment that is being reflected in the market. And now, like you rightly said, the volatility index is somewhere close to 15% as of now. And ideally, based on the Feb at the money call options and the OTM out of the money call options that we calculate, we feel that the VIX can peak out somewhere close to a 22.8 level, or let's say precisely around 23%. Now, the VIX of 23% simply implies that the fluctuation in the Nifty over the next 30 days or immediately after the event unfolds would be somewhere close to a 394. The calculation is very simple. You take the square root of 22, which comes to around 4.8 odd percent, and 4.8% of the Nifty would come to 390 points. Now, if you just add at the money premiums of your Nifty futures for Feb, that is, let's say, an 8500 call and put option, the total won't be more than 300 to 312. So, there is an impending 70 to 80 points surge in the Nifty at the money premium that would happen in the coming days. Now, to answer your question, the most important aspect is 1/4 of the FII flows that comes into the Indian markets is from through the routes of P notes. And for P notes, the two underlying that effect is obviously the Nifty, and second is the USD INR pair. The most important crucial thing that happens during the expiry is the cost of carry. Cost of carry, as the name says, is nothing but that additional cost you give in to carry the position for any instrument, which can be a Nifty future, a Nifty option, a stock future, or a stock option. Now, ideally, the cost of carry for the option is a time value, you can say, but for the futures, it is simply the premium that we see. On the Nifty, the annualized terms, the cost of carry is close to 6 to 8%. So what I'm trying to say here is, all the selling which happened, we all know that November 8th was the day when we had the demonetization thing come in, and there was a carnage in terms of selling, especially from the FII side. So the net cash sell which happened on those days of, let's say, November 8 onwards, to the present date, or let's say 25th of Jan, we are almost at the same level. The Nifty was almost at 8,500. So which clearly says that despite all the selling, we have bounced back to the same levels. And Agam, the most important aspect is, if you see 70% of the time the Nifty is in a range, and 30% when it goes to a trending zone, that is when the Nifty and the Bank Nifty, it aligns in one direction. There is a beautiful correlation between them. The price ratio between the Bank Nifty and Nifty is somewhere close to 2.26 right now, and we expect that to go to 2.32. So to simply answer your question, we expect the Bank Nifty to support the Nifty in this pre-budget rally, if I may say so, and the Nifty can possibly go to an 87.30, and we might enter, and most importantly, before the budget, we just have pre-trading session, and the Nifty has a good probability of giving you a 200 point short. So we expect to enter the budget somewhere close to an 8,700 levels on the Nifty, and for the Bank Nifty it would be somewhere close to a 19,800 levels.
Excellent. So you have given us certain levels for the Nifty and to a certain extent the Bank Nifty as well. But is there a possibility, and how are you reading rollovers when it comes to longs or shorts?
Yes, Agam, the most important aspect in a rollover is the rollover cost. And as I was saying, there is a cost of carry involved. If you remember last month, that is from December to Jan expiry, the basic average of the rollover cost for the index was around 38 basis point, which is actually low. I guess if I'm not mistaken, the lowest we have gone is around 26 to 27%, and the best we have seen here is around 62 basis point. So the last month the rollover cost was hardly 38 basis point, and currently we are at around 40 to 43. So every time there is a surge in the rollover cost without the USD INR making a new high, it clearly implies that the derivative money, which is your index future, your stock option, and your index option, the money is coming into that part of the market. And derivative money necessarily is an immediate money. That is, a short-term surge or a short-term fall in the market is always captured with the derivative money. That is exactly why we expect, because of the roll cost going on and the open interest in the Nifty almost at par to what we started the month of Jan, and the Bank Nifty giving you a positive bias, we expecting this rollover and the expiry to be on a positive note, and here on even the sentiment to continue for the next couple of days.
Okay, so positive sentiment it is. But Manoj, tell us about certain stock futures or stock option ideas that you have for this coming week.
Yeah, Agam, the most important aspect, as I was saying, we like banks as a sector, oil and gas, and couple of stocks in the automobile as well. Now, since we look into the concept of VWAP, which is a volume weighted average price. So the carnage of selling which happened from the FI side, we look into those stocks where the net sell-off value of the delivery in cash is lesser than the derivative build-up which happens. So that qualifies under VWAP. So I guess DVS Lab from the pharma is one stock where we feel the upside is quite there's a good potential for upside. DVS Lab currently is around 678 odd level. We feel let's say a stop loss of 642 and target is somewhere close to 740 to 42. So that's a good 60 to 70, another 8 to 9% move in a stock like DVS Lab is where we can expect. The second stock we like would be Ashok Leyland. Ashok Leyland as a stock, even on the automobile side, it is currently at around 87. The stock has a very good support at 83.50 levels, and it can possibly go towards the 94 and a half in the short term. And the other stock which you take, which we feel can be positively biased, is TV18 broadcast. That is somewhere close to 36 rupees, 36 and a half. The weighted average of 34.2 should be the stop loss, and we are expecting a good move that can see a distribution only close to 41 levels.
That's right, guys. So you guys can keep an eye on Divi's Labs, Ashok Leyland, which is also going to react to its earnings today, and TV18 broadcast going in. But coming down to Derivatives 101, I want to remind our audiences that we are inviting and open to questions. And the question for this week, Manoj, comes from Sunil Shah, and he asks, when does one decide as to how to deal with a straddle or a triangle, and how does one decide whether to use a triangle or a straddle for that matter?
Absolutely. It's a good question. Sunil, what I would suggest at this point of time is, since we are using totally a triangle and straddle happens obviously on your option side, so we need to try and bifurcate as to what is the differentiation we have on the option premium. Now, Sunil, most important thing I would say is 50 to 60% of your option premium starts fading once we cross half of the month. Generally we have, if I may say that, two types of month. One is a 26-day month, expiry to expiry, and the other one is a 35-day month. That is last expiry to expiry of every month. So generally, when we have a longer month, the time decay which happens on a daily basis is hardly around 80 paisa to 1 rupee on an index option. Let's say an at the money index option, and if it is a 26-day month, generally it is around 1.5 to 2 rupees. So what I try to say is, you buy a straddle. This is a very good example. Like I was saying, for this month of budget, let's say we are at 8,500. The call and put combination is somewhere close to 318 to 320, and the projection, that is. Ideally, what we do is we try to calculate 1 month before any impending event as to what is the projection on the VIX can be, and as I was saying, it might go toward 390 odd levels. So the first basic thing to decide if you should be entering a straddle or a strangle is the time of the month. That is, look into what time of the contract are you entering a strangle or a straddle. The second most important aspect would be your volatility index. Because what happens, let's say we are just a day before before the budget, the VIX would be all elevated. So even if you are right in terms of the direction of the market, I am afraid you won't make money on the direction of the profit. So the best thing to do is always try to buy a strangle when the VIX, the volatility index for the Nifty, is somewhere close to a 13 to 14%. And always try to buy a straddle when you expect that then, when you're in the starting of the month and you have a good 28 to 30 odd days left. Because on an average, if you see the Nifty fluctuates at least 350 odd points, and the combination of a straddle on an index is usually around 220 to 240 points. So that gives you enough probability to always make a profit and try to come out at the minimum loss.
Well, I don't know about you, Sunil, but I personally have also had a lot of takeaways from that question. But that is also what we have so far for Surf's Up this week. Manoj, thank you once again for joining us.
Thank you.
And as for you guys, we'll see you next week once again on Surf's Up, only on Bloomberg Quint. Thank you.